January 2nd, 2025. I'm still reasonably sick, but I'm just going to make a quick video on my trades and then call it a day. I did end up trading this morning. So I thought, when you get one and two consecutive bull or bear bars on the open, I have a pretty big folder on that particular pattern. And there was one specific example I wanted to show. Let me just pull it up for a second. This was the example that I wanted to show. Obviously, the context is a little bit different, but you have really strong bear bars, one and two, and then you get a reversal in a bull trend day. That can happen sometimes. And so when we got one and two on the open, I was willing to sell below two, but my stipulation was selling below two. My calibrated expectation was that three not be a big bear bar or not be a bull bar closing on a tie. And when three was a bull bar closing on a tie, I exited my short. And a lot of times when you exit your short in a situation like this, you can buy above three. I think three is one of those times where there's a 1 in 3 chance it's the low of the day. So maybe 40% chance you get some sort of swing, and maybe 30% chance it's the low of the day. So I ended up exiting. So I sold here, and then I exited here, and I bought above here. And we got this 4-bar micro channel 3 through 6, and that's my signal for the systematic way that I trade, as I've mentioned. And so I thought that there was a pretty reasonable chance that you could buy the close of 6 and that you would get a measured move up. So I was holding my long, and once I saw 6, I thought I would just pretty much hold the trade and see if we ended up getting a measured move. I think a mistake I made a couple mistakes today. I actually don't think I traded very well today. I did end up making money, a reasonable, nothing crazy, but I made an average days amount, a little bit more than an average days amount, but I did not start off the day very well. So I ended up buying, and I held after bar 10. I think that was a mistake because bulls in general should probably exit below 10. 10 is big enough for a second leg sideways to down. And yes, usually I'll just hold on and just see what happens. And sometimes, with this trade, you just die on your sword and you get stopped out, which is what would have ended up happening had I held even longer. But I just ended up getting out down here. But I was pretty disappointed that I ended up holding below 10. So I think exiting below 10 is the correct move after 1 and 2. If this is going to be a bull trend, you're going to get a bull bar closing near its high on 11. So it's going to be pretty easy to get back into the trade. And so I thought that, it was probably one of those situations where it would have been better for me to look to get back into the trade rather than do what I did. I can 66, by the way, buy the closed bar, stop below. One of those things where low probability, but you can do it. We might have to go back to the bar 19 low. You can see we have a breakout below the 19 low, and obviously some sort of gap. You could draw it here, you could draw it here, whatever it is. We might have to get back to this 19 low, but it's hard to buy above 67 because the risk is so large. So that's the problem with the stop order trade here, right? Might be reasonably high probability that we get to the 19 low, but this is your bar and your risk is big. So I think if you're buying above 67, you want 68 to race straight up to the bar 19 low. But anyways, after I got out, I made another mistake and I bought above 16. And the reason I thought it was a mistake is, well, first off, I'll explain my logic for buying. My logic for buying was that we had these 4 bull bars, and that we basically made a double bottom, but we did not end up getting below the low of 3. So the buy was still on. The buy to close 6, and then I was expecting a second leg up, but I thought it might start from lower. And I wanted, my stipulation was that bar 16 close on its high. I wanted it to close on its high, and it ended up not doing that and closing basically on the moving average. And so that's why I should not have bought. Had 16 closed on its high, I think it's a pretty good buy, but the problem was it did not. So I ended up getting out below 18, and I was down a reasonably, not a crazy amount, but I was definitely down in this opening range. And I was okay with the sell and then the exit, and I was okay with the buy. I probably could have gotten out here. I probably didn't need to take that trade. So I probably could have been down less this morning, which would have obviously made today an even better day. And then I basically waited through here. It's not really great to be doing anything in here because you're trading in the exact middle of the day's range. So really not that great to do that. By the way, 70% of outside down days close in their lower third. So maybe a little bit of an increased chance we close below this lower third, but you can see bulls are trying to break through the lower third, and we'll see if they succeed. I think that it's very possible we don't close in the lower third on this particular day just because we might have to close that gap. But in general, 70% chance on an outside down day, you're going to close in the lower third. So like I said, I didn't want to do anything in here because you're in the middle of the range. And I sold below, we got the breakout 34, 35, and we had a relatively, bear channel, downward slope. There's a possible wedge, 3, 19, and then 36, but I took the short below 35 and I exited on the close of 36 for a pretty solid profit. And then I resold the close of 37 since it was a 4 bar micro channel. And I basically held that all the way till 54 and I exited above 54 because I would have exited above 51, but it didn't trigger. And we kept getting reversals up. So eventually, when you keep getting this many reversals up, eventually one of them is going to work. So I sold the close of 37. I actually sold more on the close of 42. My logic for selling more on the close of 42 is that if 43 is a big bull bar closing near its high, then I have to exit the trade. And so I know what I need to not see on 43. So it's easy to sell the close of 42, expecting another leg down. And I ended up exiting the whole position up here. So I held this and this until over here. And then I bought the 53 high during 55. So I bought here and I exited on the close for a scalp at the moving average. And then I did one more thing, which I don't know how I feel about it. I bought the close of 57 and put a stop below 57, but I probably don't need to put a stop below 57. I tried to make the trade simple, but the reality is selling below 57 isn't really a great idea. So I thought that if we were going to bounce, well, first off, I thought 54, 55 in the upwards part of 56, the tail, we were going to need a second leg, and we were probably going to get up here. So basically bought the close, put a stop below, and I was trying to get 4-to-1 risk, 3-to-1 risk, 4-to-1 risk, something like that, and get back up to this area, and I ended up getting trapped out. But it was obviously a very, very small loss, so I don't mind doing that every once in a while. It's kind of similar, if you had bought the close of 66, put a stop below, your risk is very small, and you get 8-to-1, 9-to-1 here. So, the risk reward's pretty good. But so, like I said, that was pretty much it for me on the day. I'm going to try to make a review video tomorrow if I'm feeling up for it, but just been a little bit under the weather. But yeah, that was pretty much it. What am I expecting for tomorrow? Well, first off, we triggered the monthly sell. So on the monthly chart, we triggered the sell below the December low. Usually, I think this is going to get a second leg, so we'll probably get back up into this area. And usually when you trigger something on the higher time frame, it pulls back before it does anything else. So the weekly chart, well, no, that's the monthly. I suppose the weekly chart doesn't matter too much yet, but let's look at the yearly chart because obviously this is a monthly chart. Let me just pull up an SPX yearly chart. Oops, it's not SPX. So SPX yearly chart, we're pretty far away from the moving average. I don't know if we get another bull bar here. I think this year might be a little bit smaller than last year. Last year was obviously a very, very large year, and we could be pretty overbought here. So I don't know what this year is going to look like. Do I think we touch 5,000 this year? I really don't know. I honestly, that's obviously not a good answer, but I really have no idea. I'm just kind of going to see how it develops, but I'm more focused on the fact that we triggered a sell signal on the monthly chart. But yeah, all right, that's it for this video.